Hello everyone, welcome back to another webinar by MyExpatTaxes. Today we're going to talk about two new buzzwords that start with the letter F. No, it's not what you're thinking. It's not the foreign earned income exclusion or the foreign tax credit. It's the FBAR and FATCA. I know, the IRS loves their words that start with an F. So let's continue and jump into why these two words are so important for you as a US taxpayer living abroad. So I'm Nathalie Goldstein, CEO of MyExpatTaxes, and I'm here to walk you through how to make your US tax filing process from abroad as smooth as possible. Today, like I said, we'll talk about FBAR and FATCA. And even if you don't like these terms, you gotta live with them because almost every US taxpayer has to deal with this. Honestly, I think pretty much every US citizen that lives abroad and does banking has to deal with this. So let's get into it. We'll talk about what is it, who has to file these forms, because almost every term the IRS just results into us all filing a form. And as the IRS loves to pull on us US taxpayers living abroad, if we don't do it, they'll try to fine us. And not just like, a few dollars, but like thousands of dollars because, they are trying to scare us into compliance. Is what it is. So what is the Foreign Bank Account Report? Well, essentially, this FBAR form is the FinCEN form 114. And what you do is you fill in all your information about your foreign financial accounts. So it's not just bank accounts, but it's foreign financial accounts. And you have to file this form if you have over 10,000 US dollars combined in maximum balances across all of your foreign financial accounts. Yes, it's a very long definition. So let's break that down. What does that actually mean? That means that you have to look at all of your non-US foreign financial accounts. We'll get more into the details as we go along the webinar, but just keep that in mind. All non-US foreign financial accounts, bank accounts, investment accounts, etc. Then you have to calculate the maximum balance for each of these accounts. So not the average balance, not the opening balance, not the ending balance, the maximum balance. And if you do banking like I do, that's not really a number you can get from your e-banking portal. So you do actually have to track either by monthly statements, or if you're an Excel whiz, you can try to do a running total of what your daily balance is, but you basically have to guesstimate, for lack of a better word, what is the maximum balance you had in a certain financial account. And then you take that maximum balance and then you convert it to USD, and then you add it with all the other maximum balances. And if that's over 10,000 US dollars, even if just $1, even if just for one day in the year, you have to file the FBAR. And when you have to file this FBAR account, it's not about only adding the financial accounts that go over the threshold. You have to add every single foreign financial account you have. So once you exceed the FBAR threshold, every single foreign financial account must be reported, even if it had $0 in it. So with that being said, a lot of US taxpayers end up having to file an FBAR. So for one example, you're living abroad, you're a student, and you need to pay for your expenses in Germany. So your parents transfer you 10,000 US dollars, and they transfer that to your German bank account, which already has, a few euros in it. And then now you have, for a split second, over 10,000 US dollars in that account. You have to file an FBAR, even if you literally paid for all of your expenses the next day, right? So that's the FBAR. So let's get a little bit more into the nitty-gritty about this maximum balances and what are these foreign financial accounts. The first part is getting this maximum balance because it is very deceiving. It's not about just, a certain amount of money, because you would think logically, okay, I have to file this FBAR if at any point I had over 10,000 US dollars. Okay. Even if you had 5,000 US dollars in one account and then you transferred that to another account, the same $5,000. Well, guess what? Now you have a maximum balance of 5,000 in account number one and a maximum balance of 5,000 in account number two. That's how they count it. Yeah, it's double counting, but that's the way the law is written. And so again, it's based on the maximum balances of your foreign financial accounts. So if one account has $3,000, one account has $8,000 as a maximum balance, even if only for a split second, even if the same funds just being transferred around, you are over the FBAR filing threshold. All foreign financial accounts that you have must be reported now on the FBAR. So again, when we're thinking about foreign financial accounts, the next obvious thing you're probably thinking is, okay, well, it's only the accounts that I own. Not necessarily. It's about all the foreign financial accounts that you have a financial interest in or signature authority on. So yeah, it can be accounts that you directly own by yourself. It can also be joint accounts that you own maybe with your non-US citizen spouse. It can be custodian accounts that you opened for your children and your name is on it. It can even be bank accounts for a company that you work for, but you have signature authority on this company because maybe you are an employee that's in the accounting department or you have to help with payroll. So yeah, the list gets pretty expansive. So what accounts do you really report on the FBAR? This is what you see on the screen. This is just, kind of the most common types. This is not all comprehensive. It's really all about what foreign financial accounts do you have? So the most common is obviously bank accounts. If you have a bank account that's outside the US, if you have investment accounts, so you go and open up at a foreign brokerage account, certain types of investments. If you have foreign life insurance policies with a cash value, because technically this is itself an account. You have a policy number, you have right to these funds, you put money into it, money is generating. If you have a pension fund that also has some type of cash value, so normally these are employer pension funds, private pension funds. These also count because again, you have an account number, you're putting money into it, you're potentially getting income from it, potentially having interest, investment earnings on it, and also non-US online accounts. So if you have a Wise bank account with, the UK entity of Wise, if you have a UK online PayPal account, yeah, you have to report that. So generally, while there's no black and white ruling on it, and I'm sure it will come, so if it comes by the time this video is out, don't get mad at me. The IRS just takes a little while to make their rulings. But what we say to be conservative, because it's just better to be conservative, because you'll see the penalties are not worth it, right, to argue for the most part. If you have a Wise account and you have a US bank account with that Wise account, well, that's a US bank account. It's most likely opened with the US entity of Wise. If you have a UK bank account, a Germany bank account holding euros or pounds, that's most likely not a US entity account. So any non-US Wise account, please add it on your FBAR. The same goes with PayPal, right? So that is our general kind of most common accounts you wouldn't add on an FBAR. Of course, it's not all comprehensive, but we do want to call out that not every account has to go on there. So the most common, I think, how do we say it? Not mistake, but I think it's this account people try to put on the FBAR and you usually get confused because you don't have an account number, and it's because it's a Social Security type program. So if you do have a pension, but it's a government pension in terms of a state-funded Social Security type pension, where essentially you don't know how much money you're gonna get later on. You're just having some type of mandatory, contributions made from your salary, and then you're entitled one day to get a state pension. There's a reason why that's very difficult to put on the FBAR, because it's not an actual account. There is no account number. It is generally just a right for you to access public funds later. So Social Security type program benefits, such from a foreign government, doesn't have to be on your FBAR. If you have real estate, that's a property. That's not an account. If you opened a bank account to get a mortgage to buy that real estate, the bank account definitely has to be on the FBAR. But the property itself is it's a property. It's not a foreign financial account. And then that also goes, in the direction if you have a credit card itself is not an account. Any bank account associated with that credit card, yes, that is a financial account, but a credit card itself is not an account. A mortgage, also not an account. Any bank account associated with that mortgage is, of course, an account. And then we get into this whole question of, well, what happens if, you have an account linked to a mortgage, but there's a negative balance? Just report it as zero. Make sure to report it, right? Because if you do have an actual account, that should be reported. And of course, if you have foreign accounts that are maintained by U.S. military account, those don't have to be included because it's technically under the U.S. still. So how does it work to file this FBAR report? Well, the first thing we need to know is that almost everyone has to file this FBAR if you meet the threshold, U.S. citizen or green card holder. I think that's pretty obvious. But what's not obvious, right, is children, U.S. children. So again, in the example I gave earlier, if you are filing an FBAR and on your FBAR you have a couple custodian accounts that you're including on there, accounts that you have signature authority over, so you opened investment accounts, saving accounts, etc., for your children to help them save money later on. Those accounts definitely have to be on your FBAR because you have signature authority on them. But guess what? If the combined maximum balances of those accounts per child is also over 10,000 US dollars, your child also has to file an FBAR. Even if those accounts are already on your FBAR as the parent, your child must also file their own FBAR if their foreign financial accounts are also over the maximum balance. So the FBAR is a very finicky form where it's per person. So I'll give you a few examples. If you are married to another US citizen and you only own joint accounts and they don't have any other separate accounts, you could technically file an FBAR just for you and your spouse on one FBAR. However, if you have joint accounts, but you have your own accounts, and then your spouse has joint accounts with you, but their own accounts, your spouse then also has to file their own FBAR. And then children will always have to file their own FBAR, even if those accounts are already reported on the parents. While this sounds like quite the headache, it is something that is easy to do in our MyExpatTaxes software, because what you do is you basically just check a box to say, I want to file an FBAR for my spouse if it's necessary, and I want to file an FBAR for my children if it's necessary. And then we will figure out all of the complicated logic in the background, and you just enter all the foreign financial accounts that's in your household, and then we will figure out who needs to file an FBAR and e-file it accordingly. So with that being said, one thing that you do not need to file an FBAR for is if your spouse is a non-resident alien spouse. So they're not a US citizen, they're not a green card holder, but they are filing with you on your joint tax return because maybe you want to file married filing jointly. In this case, your spouse actually doesn't have to file an FBAR. FBAR is only for US citizens and green card holders. So if you have a non-US citizen spouse, they do not have to file an FBAR. If your children are not US citizens, they also don't have to file an FBAR. Whew. A lot of information, I know, and again, that's why we created MyExpatTaxes as, the leading tax software, because it's not just about filing your US tax return. And while that gets, pretty much all of the attention, there are a lot of associated forms that you have to also think about, like the FBAR. And that's why MyExpatTaxes is all comprehensive, where you can go in, you can file your US tax return, you can easily file your FBARs, and then you can also easily file for your spouse if needed, or for your dependents if needed. And with that being said, if you haven't been filing FBARs and now you're a little spooked, just relax. There's always some type of amnesty program. The IRS understands, I think they understand that they have made things so complicated for us US taxpayers abroad. And so they do have a lot of programs for amnesty. So if you haven't been filing your FBARs, there is a delinquent FBAR submission procedure. So obviously you can go through streamlining, which if you've watched any of our other webinars or if you're kind of in this expat tax world, you probably have heard that term. In the event not, streamlining is basically an amnesty program where if you haven't been filing, you can catch up on your past tax returns plus your unfiled FBARs all at once to get tax compliancy. There's an additional program called the Delinquent FBAR Submission Program. And this is for those that have been filing their federal tax returns. However, they forgot their FBARs. So if this is you, you don't have to go through the whole streamlining procedure. You can go through the Delinquent FBAR Submission Procedure, which MyExpatTaxes also offers. So in that case, you just file 6 back years of FBARs, review it on MyExpatTaxes, hit submit, and then you're compliant. Even if you haven't been filing for like 10, 20 years, just 6 years. And even if filing 6 back years of FBAR sounds really complex, there's a couple tips and tricks we can give you. So one is if you don't know the account number anymore because maybe the account has been closed and you just have no access to that account number, you can generally write unknown. Just write, unknown as the account number. The important thing is that you show that you're trying to be compliant. So as long as you still know the financial institution and you give the financial address, that is important. Because remember, and we'll talk about this in the next few slides, the US Treasury probably already knows this information. So with that being said, if you don't know the maximum balance, there is a checkbox on the FBAR that says, I can't calculate the maximum balance. We don't recommend using it for everything, but obviously if you're filing, an FBAR 6 years ago, maybe you don't know the maximum balances anymore. For the current year FBAR, I think it should be possible to find the maximum balance, at least to guesstimate. So with that being said, what if you don't do it? What if you just don't file the FBAR? What's going to happen? At the moment, I'll be honest with you, I don't see any letters going out. I haven't really ever encountered that a US taxpayer actually got a letter from the IRS demanding penalties or from the US Treasury demanding penalties for an unfiled FBAR. But technically, from the law, there are very large penalties. So if you are not filing the FBAR on purpose, you can see the screen. I'm not going to repeat it. Those penalties are very large. And so even though we have never seen someone actually get a letter or a bill, we have seen instances where penalties this high have been enforced in other situations. And so we just recommend, if this is something that is keeping you up at night, go through the delinquent FBAR submission process or just file your FBARs because it's going to take a little bit of time and it's not fun. Okay, we try to make it as fun as possible, don't get me wrong, but I wouldn't necessarily say it's a fun process, but it's a lot better than just thinking that maybe one day in the mail, you're gonna get a bill for $10,000 upwards of a fine. I personally wouldn't want to have that living, in my conscience. So when are you filing these FBARs, right? The FBAR is submitted alongside your US tax return. Keyword alongside, not with, alongside your US tax return, because we got to keep you on your toes and we got to make this as complex as possible. So there are 2 deadlines for the FBAR. April 15th is the deadline to file your FBAR. No, that would just be way too mean if they kept it that way. Yes, April 15th is the deadline to file your FBAR, but you have an automatic 6-month extension. So you literally don't have to do anything. You can just wait until October 15th. And then when you file through MyExpatTaxes, we'll claim your automatic extension for you. So effectively, the deadline is October 15th. But I do want to call out, there is no further extension. With the US tax return, you can further extend to December. October 15th, that's the final deadline. There is no further extension. So you need to file your FBARs by October 15th. And then, like I said, it's submitted alongside your US tax return. So you are not e-filing your FBAR to the IRS. You are not mailing your FBAR to the IRS. You are electronically submitting your FBAR to the US Treasury through their own system because that's the way they like to play it. Just make it more complex. Again, that's why we're here. MyExpatTaxes will make sure that your tax return is e-filed to the IRS. We'll make sure that your FBAR is e-filed to the right department at the US Treasury. If you are filing your FBAR yourself, just make sure that you are not sending it to the IRS because you get no credit for that. You have to make sure that it gets to the US Treasury. I know. Let's get into the next form, which is e-filed to the IRS. So that's FATCA. What is FATCA? Foreign Account Tax Compliant Act. FATCA is a law that essentially makes you report your foreign financial accounts to the US, which you already knew about. But maybe what you didn't realize is it's also making your foreign financial institutions that you bank with, that you have accounts with, making them also report to the US. So yes, there's actually a paper trail, maybe not paper trail, but there's an electronic paper trail in the background, because basically all foreign financial institutions must comply, or else you can't do business with the US. And the US is, I mean, it's an economic powerhouse, and I guess everyone has to just comply. I don't know. Anyways, if you ever went to open a bank account, maybe you're in France. I think France is the most notorious. They may look at your passport and say, no, we don't want you. You're a US citizen. We're not opening an account for you. Maybe you tried to open a brokerage account online, right? I can just say I've tried to open a few brokerage accounts here in Austria from Austrian companies. And the minute that, I do my identity verification and I show them my US passport, they're like, sorry, we don't support you. Bye-bye. That's FATCA. It's all because of FATCA. It's because basically, if you have US clients, you have to report this information to the US Treasury about their foreign financial accounts. So this is why it can be difficult to open accounts. And once you do have accounts that are open, you have to report them. So the foreign financial institutions are reporting these accounts to the US. You yourself also have to report it. And with that being said, is what does this effectively mean reporting it? Because I just talked about the FBAR, but FATCA is a little bit different. It's connected to the FBAR, but this actually results in a different form. And this form is Form 8938. So before I get into the details of Form 8938, basically, who does FATCA affect? Really, all US expats, US citizens, dual citizens, green card holders, anyone with US citizenship, right? Or some type of US connection. So you can't really get out of it. I'm sorry. Yeah, you have to file this FATCA form, which is basically an extended version of the FBAR. Really, if you put the FBAR form and the Form 8938 side by side, it's almost the same. It's literally the same. FBAR will ask you for your foreign financial institution name, the foreign financial institution address, and the maximum balance and the account type. That's what FBAR normally asks for. Of course, how do you own this account? If it's joint, single, custodian, and then, if you're owning it with other people, the information from those other people. Now, you have Form 8938, which asks pretty much the same information, not so much about the different owners, but essentially the same information. And then it'll ask you, did you open or close this account in the year, right? And a couple more questions about the account. So it's one and the same. And that's why in MyExpatTaxes, we don't make you fill out this information twice, right? You fill in once and then we decide, okay, yes, you have to file an FBAR. We e-file your FBAR. Oh, you also meet the thresholds to file 8938. We'll make sure we also include that in your US tax return. So if you are a do-it-yourself filer, and when I say do-it-yourself, I really mean like you are doing your tax return yourself with paper and pen, or maybe you're using a US-based tax software or US-based firm. It's very common that they'll tell you to take care of your FBAR filing requirements on your own. And then you go, okay, well, I've done it a few times already. It's not so difficult. I go to the US Treasury site, I e-file my own FBAR, done. Remember, if you meet the thresholds, which you see on the screen, and those thresholds are a lot lower if you actually spent any time in the US, right? If you lived in the US any part of the year. If you meet those thresholds, you need to also include Form 8938 in your US tax return. So just filing an FBAR, and like I said, a lot of US tax firms will just tell you, we don't deal with the FBAR. We just do your US tax return, you do your FBAR yourself. That's a really dangerous approach, because if your FBAR shows that you met the thresholds for 8938, but your US tax firm never asked you about it and they didn't include Form 8938, could be some issues. So yeah, you do have to effectively submit both forms. You have to file the FBAR if you meet the FBAR thresholds, which is a lot lower than obviously the Form 8938 thresholds. And then if you meet the Form 8938 thresholds, you also have to file that form. The FBAR goes to the US Treasury. Form 8938 is submitted with your US tax return. If you do not file the Form 8938, well, you can already see by the screen how much text is on the screen that it can get pretty serious. So again, I'm not here to scare you with the penalties. We personally haven't seen any letters going out for this either, but it doesn't mean that it won't happen, right? So please, if you meet the filing threshold for Form 8938, which can start at 200K maximum balances, depending on your filing status, or even lower if you lived part-time in the US, please make sure you include this form in your US tax return. It is a high penalty form. And when is it due? It's due when your US tax return is due. So if you have a filing extension for your US tax return, it's just simply due at that time. So, you can obviously file it by April 15th, especially if you're living in the US, right? And you have a lower FATCA Form 8938 filing threshold. Try to e-file by April 15th, but you can still get an extension till June 16th, the 2-month automatic extension if you're an expat. And if you need more time, you can always file an extension with Form 4868 through MyExpatTaxes to October 15th. If you need even more time than that, then you can also submit a written request to get an extension until December 15th. So again, all of these extensions that you need, we can always help you with them at MyExpatTaxes. So as you're looking for support on your US taxes, just know that we have a plan for everyone. Whether you want to be in our most affordable base plan and do your taxes yourself, still using our innovative and revolutionary tax software that will make sure that you claim all applicable eligible tax benefits and also include your FBAR and FATCA filings inside, or you want to jump to be in our reviewed plan where you want to do the most of the work yourself. However, maybe you have 1 or 2 questions or you need a tax professional to just review things for accuracies or inconsistencies. We also have that available. And of course, if you need more than that, if you need someone to walk you through, so maybe you're filling in the information, but you're not exactly sure how to fill it in, you would like to have someone discuss it with you, if you want to have potentially an added on video call, or you just really want to have the assurance that you have a personal tax professional that is assigned to your case to give you premium support, well, that's why we have our premium plan. And if you haven't been filing your taxes and you need to get compliant, there's a streamlining plan as well. Just know that whatever plan you're in, we always think about your FBAR. It's not like with the US tax softwares or US tax firms, which I said can have a very dangerous approach where they say, we don't want to talk about your FBARs, we don't want to talk about your foreign bank accounts, you deal with that yourself, we only do your US tax return. No, these two, they're related. So you have to think about both of them at the same time. And that's why no matter which plan you're in with MyExpatTaxes, we'll always ask you about your foreign bank accounts, your foreign financial accounts to ensure 100% compliance. So if you need support, we're always here for you. MyExpatTaxes.com, the one and only MyExpatTaxes. And we'll always make sure that we are looking out for you and helping you get tax compliant. If you have any questions, join us for our live Q&A coming right up. If we don't get to your questions, please don't hesitate to join our Facebook community, which you saw on the first slide, but of course you'll see on the screen again right here. Join that. You can always ask questions there. You can always email us at team@myexpattaxes.com. You can find us on social media. If you have questions, we are here for you. Thank you for watching this webinar, and I hope you were able to get some important information out of it.